Hello guys, this is Everest FX and the Forex Gladiator. So we are going to be doing the market outlook for the beginning of February 2026. So you
Okay, so now,
can start.
okay. Ha. So like this now, this market now be from what we see for this higher time frame like this, it is bullish. You understand? But when it comes to the recent price action, price dey bearish and market dey try balance price based on see this monthly break of structure here now. You understand?
Yeah.
Monthly break of structure, so price will need to go back to at least 50% minimum, 50% into this range between this low, between this low and this high, between this high and this low. They're supposed to be inverse here, like this. Between this low,
Click on that.
between this low and this high, this 50%. And you see now price don't pull back inside that 50%. So now for this monthly time frame, if you expect bullish movement, shall but it will take more like it will take a lot of moves, maybe 3 4 months for us to start seeing the push up to the upside, you understand?
Yeah.
But when it comes to this recent price action, you know say we like this now as internet traders, so we pay attention to everything wey dey happen for
So
here.
this thing are billions day or no?
You understand?
Now one month with this.
But you get my point now. So we pay attention to the recent price action. Now, when it comes to this recent price action, now we look at where price is coming from and where price is reacting from. You understand, ba? And if price is coming from somewhere, it's definitely reacting from something, either a supply or a demand. You understand? So like this now, we see from this monthly, see look at this. As we dey trade SNR now. Show your people
Yeah.
know say we trade SNR. Okay, now we see this key level. This is an A-shaped key level. You can see from the line chart. You can see this is an A-shaped key level. And if you look at price created a high, that is the previous month high. Before after creating it, it swept it reacting to this issue, this key level right here, and then sold. You can see the CRT high and then the CRT low. You see, and now price has fully distributed. You understand, to the downside. You understand.
Yeah.
So and now on this recent price action, you notice that price is bearish. On this recent price action, price is bearish, not bullish yet. So and now look at what price is reacting to. It's reacting to this OCL, this open close level, and then has finally broken structure here on the monthly. You can see it has finally broken. So this is a break of structure on a lower time frame. Understand? This is a break of structure on a lower time frame. Don't worry, we will go to it when we go on. We will revisit this level when we go on the lower time frame. You understand? So now, and now this is a new month. That is the month of February. What I'll be expecting is for this month to open here, somewhere here, somewhere
Yeah.
here, and then push up either to this place or the most recent level. That is this one to continue the sell down like this. You understand?
Yeah.
To continue the sell down. So we'll be expecting a buy to sell in the month of February. You understand?
Yeah.
Buy to sell. So now look at this place. Where is the market going to sell to? Either to this to the next draw on liquidity, which is this low.
Yeah.
The first draw on liquidity will be this low. This low will be our first draw on liquidity. And then the next one will be this one here. Will be this one. Let us leave it for now like this. This one
This one.
and this one, yes. For DXY, the
Mm.
next draw on liquidity. So this one, this will be the main one before this one. But now look, this place now, price is reacting from this place, or price has reacted from that place already before. And price is reacting to that same place again. So in on the higher time frame, price can use a particular key level multiple times to reverse price. You
Yeah.
understand? So this is also a place we should pay attention to. But the main focus now is this key level that price is rejecting, and then the break of structure right here. This one price has swept it. And so you understand? So we are expecting for price to open here, push up, and then finally drop to our next draw on liquidity. So now
Okay.
for us to fully confirm that this sell we are looking for is going to work, we need to go to the lower time frame to determine the storyline of the monthly. That is the monthly storyline. So we are going to check if the weekly has broken. You understand? And now you can see the weekly. Look at the weekly. And you see this key level here, this the monthly key level is aligning with the weekly, this weekly OCL.
Yeah.
You can see it's aligning with this weekly OCL around here. You can still find it to this place, but let's leave it at that. You understand? But it's reacting to this place, and it has given us what a break of structure here, a break here. So meaning the monthly is bearish. You understand? So our bearish price movement now is confirmed. You can see this reaction here is just like a reaction for a pullback, and then we get the continuation. So now for us to get that monthly reaction, for us to get that monthly how will I call it? You know, that let me put this thing. Let me set it's a monthly, yeah? Monthly.
Okay, increase daily and 4 hour.
So now for price to pull back, where is the price going to, like the closest place the price is going to pull back to? We have
Yeah,
this place, this place.
yeah.
Let me change my chart. We have this place,
Let's say the breaker block.
this place,
Yeah,
and
let's
we
see.
also have this place here. Yes, we have this place here. That price can pull back to. Price can pull back to. You understand? So price can now give us something like this. Open high, just like the formation of candle now. Open high, high, low,
Low
close. You
and
understand?
close. Yeah.
To form the monthly bearish candle. So let's go to the weekly. So now we have confirmed that the monthly is bearish. So now what about the weekly? The weekly will have to complete its storyline for the monthly to complete its own. And then for the weekly to complete its storyline, the daily will have to
Daily
complete
have
its
to
own.
complete.
So that is how we do our top-down analysis as an external trader every month, every week, and every day. You understand? So now this is our key level on the higher time frame. Let us refine it to this level here. Refine it to this level. That is our monthly key level. Refine to a weekly key level. You
Yeah.
understand? And you see how price made use of this place here around there. So this place is the value area for price reversal. And we cannot just take entry directly from here. You understand? On the lower time frame, we cannot just take entry directly from here. We have to refine it on lower time frame. So now let's analyze the for the weekly. Let's analyze for the weekly. And now, if you look at where this price is reacting to, it's reacting to a weekly key level, a weekly key level around this OCL here. You can see it. This OCL,
This also,
you
yeah.
understand, is reacting to this place. Or you can change it to this QM right here. This QM here, as the case may be. Is it? Let me go to the right point. No, it's not. No. Just to get the accurate. uh, So to get the accurate points. Let's see this really reacting from okay. You can see how it's reacting from this that QM. So now, anytime you enter the chart, first things you ask yourself is where price is coming from and what price is reacting to. And then what price is reacting to can actually give you a hint or either a bias to where price is likely to go to. You understand? So like this now, this weekly is reacting from this place. But from the previous week, where is the previous week coming from? The previous week to know the current storyline and to know the po ten tial storyline that is about to start or the storyline that is about to start, we have to first of all know the one that just ended or the one that is currently in play.
Yeah.
You understand? Now you can see this weekly. This weekly is coming from this point here. You understand? You can see a weekly is representing a weekly key level that is aligned with a monthly key level. You understand? So now let's go to a daily time frame because it's always a one time frame. You can see this place here that we marked as a break of structure on the monthly time frame. You can see it here. You can see how it's a break of structure on the lower time frame. So let's take this out and this one too. We can also take it out. So this is our monthly slash weekly key level, monthly slash weekly key level. You understand? Same thing here. So you can see how this weekly is reacting from this level, right? The same thing here. So we go to one time frame lower, which is the daily. Um, YouTube, Babu network power. This,
You're not serious.
but this price action for this chart. Now, okay, you see say this place now.
Yeah.
You see as price react to that weekly give us daily breakout. You understand? Daily breakouts happen here. Our daily breakouts happen here. This place. Daily breakouts happen here. And you see how price just continue moving down. So now the previous week is bearish. Our previous week storyline is bearish. Same thing as the monthly. But now this week now you can see here, this is a key level that price is about to break or has broken already. And if you look at the line chart, you can see here around here, price has broken it already. You understand? Look at this, look at it here now. Price has broken it already. So now weekly has turned from bearish to bullish, right? Has turned from bearish to bullish. So now we can now look for short-term buys into these areas here, this level on the monthly. You understand? Ba? Just as we said, price will have to pull back. So we'll be seeing this one as a pullback on the monthly.
To
You
continue
understand? To
selling.
continue selling. So now we can trade the weekly into this place, this area and this area. You understand? Ba? Before we can now look for a potential sell to the downside. You get my point? So now the same thing, we go to the daily and look for what the daily is reacting to. Look for. So for us to balance, look at this daily now. It has broken. I mean, I like you know fit pause am.
No, if you pause am. No, just do wetin you wan do now. I will cut here comot.
You get ba?
Yeah.
So now the same thing here. But now, sorry, how far? No, I'm still at the shop. Yeah, we are doing a market outfit. So once I'm done, if I'm doing one, I'll let you. You understand ba? So now look, from here now, we'll be looking for buys on the lower time frame to this area here, this area. And you can see on this time frame, you can see a very big fair value gap. That price is likely to go and rebalance this gap here. You can see all this gap here. Price can likely go there to rebalance. So everything is aligning with our buy to sell.
Yeah.
You understand ba? So now on I don't really understand this price action now. Like this daily price action. I don't really understand it. But let's use 4 hours. Let's use 4 hours. We needed to know the daily storyline so we can trade in the direction of the daily storyline and the weekly storyline. You understand?
Yeah.
And then later on we can now look for a potential entry for the monthly and then trade in the direction of the monthly time frame, monthly time frame using the lower time frames. You get my point? That way
Yeah.
now we can catch long term trade or swing trades. You understand? As SNR traders, there's every possibility for us to day trade
Also
and
swing
swing
trade.
trade. You
Yeah.
understand? You understand? Depending on the kind of setup. Based on your knowledge, you understand, you can day trade or swing trade or whatever you're comfortable with. Like this is the 4 hour time frame. You can see this is a key level of the 4 hour time frame that price is supposed to be. Guys, if at all this place was a daily, rejecting daily, we'll be waiting for a 4 hour breakout around here. But these are internal breakouts, which are very, very risky when it comes to SNR and SNR traders. These internal breakouts are very, very risky.
Risky.
If you are not an experienced trader, you cannot trade this. You cannot take any setup around this zone here. This zone here, you cannot take any setup. So if you're an experienced trader, then you can now take a short-term buys around this area just to target the break of this high. You understand? Because this is a one leg move. And then according to SMC, this is an internal range liquidity here. When it comes to SMC, this might be an internal range liquidity for a potential sell around this other block. You understand? This other block here. You get my point?
Yeah.
So now, but we are not SMC traders, but we do have the knowledge of SMC now. You know what I'm saying? So this will make us wait because at this point now we don't know what we are doing.
So let's just say we're waiting for a break.
Yes. Now, if
Then
you
we
are
enter from the reversal.
yes, if you are using trend line now for all these trend line traders, they can use something like this to that is for continuation. You understand? Trend line traders they can use something like this for continuation and then align this trend line with a key level. You understand? Something like this, like this. You get my point? And then this point here is called the EQ point. That is the equilibrium point or something like that when it comes to trend line trading. You understand? so they can align this place and then use this place for buy continuation. Because if you are like I said, if you are an experienced trader, you know exactly what I'm doing here. This is a fair value gap. The price can still pull back to the balance. And then if you go to 1 hour, if this place is still fresh on the 1 hour time frame, you can now take it as a buy entry. You can see how fresh it is on the 1 hour time frame. You can see the same level on the 4 hour time frame. You can see the same level. That is an OCL on 4 hour time frame. Same thing here, an OCL on the 1 hour time frame. So this place is a high probability place for buy continuation. You get my point?
Yeah.
So like this now, when it comes to SMC traders are going to see this place as a sweep of liquidity here and a break of structure here, which they are going to be waiting for an inducement, which you can consider this as an inducement. You can consider this as an inducement, and then they will use this as a breaker block, this same entry as a breaker block, either on the 30 minutes time frame or 15-minute time frame.
15 minutes. Yeah.
You get my point? You can see how it aligns with everything you just said. You understand? To continue for that buy, you can see the inducement here, and then we can wait for a pullback to these areas here, and then continue the buy to the upside. You get my point? Continue the buys to the upside. So, but for now, as external traders, you can actually take this if you are an experienced trader. You can take this if you are an experienced external trader. But if you are not an experienced external trader, what you have to do is to wait. Monday markets are usually slow. You understand? Monday markets are usually slow. So you can wait from on Tuesday to see what the daily candle of Monday does. And then you can use
Then
that to frame your buyers for throughout the week. You already have the buyers already. You understand? For the week and the month. You already have the buyers. Which the weekly is actually going to buy to this either this level or this level here before you can now start looking for sales to the downside. Understand?
okay. So let's say from let me see. Let's say from 4 hours. Okay. So now let's say from 4 hours tomorrow we are going to be waiting for price to break this place like this.
Yes.
Then we can enter from
The
maybe
pullback,
here,
yes.
here or here,
Yes, anywhere around here.
something like that.
Yes,
Let's
that is
say
for buy continuation.
yeah, we
Yes.
have QM here. This
But
QM
the thing
here.
is that
We still have an OCL
but
down
the thing
here.
is that this particular price action bar
Mm.
is not really clear on the daily time frame. If not, I would have said we should frame the daily storyline. But now what we are using is the weekly and the monthly.
Okay.
You get my point?
Yeah.
The weekly and the monthly. But what I was assuming is that what I was assuming is that if this place is, let's say, reacting to a daily key level just as the weekly key level, if it is fresh too on a daily key
On the
level,
daily key
you know that
level.
we can also use it to frame a daily storyline too. So it will be like a daily storyline in a weekly storyline, but the daily storyline must have to complete before the weekly completes its own. You understand my point? And you can now use that to get a confirmation entry on the 4 hour time frame. This that is which I just did. You
Yeah.
understand? Which I just did using trend line. Now let's just do something. Let's just look at this level. You can see how this level is. I'm not sure if it is fresh or unfresh, but let's assume it is fresh. Let's assume it is fresh on the day. And see, let's assume it is fresh. So assuming that place is fresh, it will now be a daily, I mean a weekly, no, a daily inside a weekly key level, right? So which is highly probable for price to react and move very massively from that level because it's like two key level in one or like two
One.
in
Yeah.
one. You understand? So now we'll be waiting for a break, this break here, for a continuation to the upside. You understand? So what I'm saying is, let's say in the midnight, and you know that spike that usually happen in the night now
Yeah.
during Asia, to just spike up and then
Even
go this key
markets
level.
open by 10.
So you can see the potential pullback to this area here and then continuation for buys. And you can see how this 4 hour candle swept this low. So liquidity has been taken out. But the concern is, SMG traders will be looking at this as another block. And then, okay, the other block has been mitigated because of this week. But most people use the body of the candle. You understand?
Mm.
Just as SNR traders now, we usually use the body instead of the week. So like this now, this one has been mitigated. Except you'll be looking for something around here on the lower time frame. You
Okay.
understand?
So let's look at EU.
Okay.
Maybe EU and GU.
Euro USD, right?
So maybe
That is
use
another.
forex.com for you
Okay.
scatter my chat.
So let's use for example. We start from the monthly because we are entering a
It's a
new
new
month.
month.
We can put it's in African and so let's start from the monthly. Okay. So this is the monthly chart or price action of Euro USD. Right. So like I said, if you are entering a new month, you start from the monthly time frame to the weekly time frame and to the daily time frame. And first things first, what you will ask yourself is that what is price doing? Like the trend, you look at the trend on that particular time frame and you can see how the trend is. The overall monthly time frame is bearish. You can see break of structure to the downside and
Yeah.
then price going to this other block around here on the monthly time frame. So there's every possibility that we will see a very, very bearish price action to come take out this low here. Just as the normal SMC break of structure, retracement into apex and then you come down, you
You
understand?
know another thing that I'm looking at, if DXY, if we're expecting buy to sell in DXY,
DXY.
then EU will be sell to buy.
Sell to buy, exactly. So now you understand, but it's the same thing, like the same thing we saw on the XY because the XY was actually breaking structure to the upside.
Mm.
Abi was breaking structure to the upside, while this one is breaking structure to the
Yes,
downside.
yes.
You get my point? So now, but we focus on as intraday traders or as day traders, we can focus on the current price action because this is a monthly time frame. So since it's a monthly time frame, we look at where price is coming from, what price is reacting to, and potentially with that information we can know exactly where price is likely to go
To
to,
go to.
right? So now where price is coming from, you can see where price is coming from. Price is coming from this OCL after taking out this CRT low, after taking out this CRT low, let me annotate it, this CRT low here, and then taking out the CRT high. So it has completed the price action, this CRT high. And then you can, if you are an advanced CRT trader, you understand why this high was also taken out. And then you can maybe hold your trade from here until you take out this external range liquidity from the upside. You understand? So you see where price is coming from. Price is coming from this monthly OCL. And now where the price went to, price went to this OCL here, and you can also call it another block. You can see it. This is a bearish engulfing candle. You can see this is a bearish engulfing candle here. Bearish
Mm.
engulfing candle, and price is reacting to this OCL here. So and price has taken out this external range liquidity. Price has taken out this external range liquidity. So price has taken out this external range liquidity right? So now price is reacting from two monthly OCL right here. You
Yeah.
understand? And you can see this place is bearish, break of structure, retracement, and then we are expecting a push to the downside. But we are not now this one is like for position traders. You understand my point?
Because this
So
whole move is from 2020.
so you see, this one is for
Okay.
position. So we focus on the current price action. So now we see that price are taking out external liquidity and then price reacting to this monthly OCL. So now we go down to a weekly time frame to get our break. So if we get our break, we will know the direction of the monthly. Abi?
Mm.
So now you see we have a break here already. Um, so we have a break already. You see monthly rejecting monthly and then we have a weekly breakout, right? So now we remember the XY, the monthly is bearish.
Mm.
Now on EU now we have the monthly as bullish. You get. So now if this month closes like this, the new month we are expecting it to do exactly the way we saw the opposite of the XY, something like this, to either this place or somewhere here, and then that is a sell to buy, right? To take out this next our next draw liquidity, which is this high. So now you know we are going against
The
the
trend.
idea of SMC.
Yes.
You understand? We are going against the idea of it because this whole place here is an order block and then a bearish engulfing candle, right? So this place now is a very clean area for reversal. That is, we are taking a sell here because it is aligning with a weekly and monthly in the same zone. You can see it here in the same zone. So now we are expecting a push to the downside before we get a buy to the upside for continuation for the buy, continuation for the buy. So we can get this the best zone actually to actually get those these buys from
The
is
monthly.
from the monthly key level to the weekly key level. That is the monthly and the weekly key level at the same time. That is to get the best price action, which is here. The closest will be here. The closest weekly key level, monthly key level will be
Monthly.
here for reversal here or here or here. These are the closest ones that I know that price can reverse on the monthly time frame. So in this new month of February, we'll be expecting the price to the candle to open here, either come to this place or this place, and then continue to the upside. You get my point? Ehen. So this is see. So now you get the point now, huh? So right now we are on the weekly. So now let's build. We are done with our. You can actually refine this to this level here, and then we can refine this one to this level
This one.
here. Yes, the closest. I refine it to this level here. But when it comes to SMC traders, SMC traders are going to look at this as a breaker block here. Support and resistance traders will look at it as support and resistance. So everything is just like the
Everything is
same.
the same.
It's just like the same thing, just different way of trading it. You understand? Everything is just the same, just different way of trading it. So now let's build our bias for the weekly time frame. So now you see, like I said, this zone here is like a monthly and a weekly in the same zone. So we can still use this zone, right? Because it is fresh on the weekly. So now weekly is rejecting a weekly time frame, a weekly key level, right? And then from here, this is also a weekly key level here, a fresh OCL that weekly is reacting for. Or you can use this one here, this one. You can use this one here because price has used it multiple times. Price is one, two, price has used it multiple times here. You understand? So we can still use this one as the weekly key level because it is still fresh. You can see it is still fresh. So we can use that one too for the weekly. So now let's look at the daily to see where price has broken. This one here is just like the previous price action. So we are looking at this one. If this one has a break, then we can use this one for continuation. But this one already, okay, look at this one. This one has a break already. From here, price has given us a break already because let's use this down one instead of this one.
Mm.
So we use this one. So price has given us a break already here. So now we can say the weekly is bullish. The monthly is bullish, the weekly is
Weekly is
bullish.
also bullish.
You understand? The monthly is bullish, the weekly is bullish. Here, we don't have any break here. It is only the break of an OC, which is not realistic. You can use it for a sell. Oh. You can use it for a sell because this is just like a break on the lower time frame. You understand? You can use it for a sell. But the one we'll be looking at is the weekly. This weekly is bullish. And then for a storyline to end, it will have to start a new one.
A new one, yeah.
You will have to start a new one. But since it has not started a new one, we'll be using the monthly bullish and then the weekly bullish. So everything is bullish, right? So now you know that okay, if you want to sell, the sell is very, very, very risky. You understand? If you want to sell, the sell is very risky. So now, since we know that the monthly is bullish and then the weekly is bullish, now let's look at daily. Where is daily coming from? Daily is coming from this zone here. Look at the previous day and look at this the Friday that is on Friday. This is on Friday and then this is Thursday. This is Tuesday and then this is Monday. Let's look at where price is coming from the daily. Let's look at where price is coming from the daily. Let's look to our left to see where price is reacting from network. It's kind of slow. Hope you
No,
also
I,
talk.
yeah.
Na because say you get experience o.
What?
You na experience trader you understand ba? But if
Mm.
na like newbie now, they will not understand this thing. Come let me shape this one. So let's look from above. This is a key level here. This is a key level here, right? This is a key level here. Just like a breaker block. A breaker block that price was supposed to use. So let's see. Let's see, okay. You see how price reacted to it. And it is fresh. Car price reacted to it. So now let's look at, okay, this one is on Monday, ba. This is on Monday. We'll keep that one aside first. Now let's look at Thursday, because Thursday just came, reacted from nowhere that we don't know about, and then Friday started dropping. So now let's look to our left and see if there is a key level that maybe we are missing from this, for the one that Thursday reacted to. Either this place. I cannot use this one because it has been used. You understand? It's not fresh.
Mm.
Understand? No, it should be fresh because the Monday price action actually closed above it. You understand, ba? Closed
Yes,
above it. You
yes.
understand? It closed above
Mm.
it. So let's look. Let's look. Exactly. You see inside the top, ba? See inside the top. So now let's
Monday
take
close above and Tuesday gonna close below
Tuesday.
am.
So you see this place is is a fresh to level, and you see how price exactly reacted to it. Abi. So
Mm.
should we use this one or this one? We use the current one. Abi.
So, yeah.
We use the current one. Let's go to 4 hour time frame to see if price has given us a break. So now we'll use the daily time frame. If price gives us a break now, we can use this the current storyline and trade into the weekly and the monthly. You understand, ba?
Yeah.
But you know that okay, you are trading for the day. It is so you will not be swing trading. It is when you are
Just short,
trading
short trade.
it is when you are trading in the direction of the monthly and then
And the
the
weekly.
weekly. That is when you know you can swing trade. You can hold one position for a very long time because you know the exact target. And the exact target is this overall high here. You understand? So you can see how price reacted to this zone here. And you see, look at this fresh level reacted and then broke. You see this sell, but people miss this sell definitely. Me sef I miss this sell. You can see the break here. See the break
Mm.
of structure here, see the mitigation and then the break here. And then if you see where look at this bearish engulfing candle, you can see how price came back. Okay, price is not even mitigating. Look at what price
I
used.
remember the cell.
Price used this OCL here that was used multiple times and then broken becoming this one was a resistance and then broken becoming support, and look at how price mitigated it. So now let's go to daily to see if there was a key. You see that key level, see this key level. So you see this key level. That is why they say the best key level comes from the higher time frame. If the higher time frame is the key level in the higher time frame is aligning with the key level on the lower time frame, is a high probability key level. And look at this place. This is a V shape, a support. You understand? And look at how price use the same support on. You can see the same place. This is the same place that price use to sell from after creating inducement. Now this inducement now you'll be very surprised that it will be doing Asia. You understand? This should be
Mm.
like Asian high. This should be Asian high. And then let's say maybe during London Open or during New York Open. That is when price actually. Let me use.
Start dropping.
Okay, this one is 11 a.m. 11 a.m. This time zone wey dey use na which time zone?
So na normal GMT na minus
No,
one.
okay, Lagos pa.
Lagos,
Okay.
yes.
This is 11 a.m. That is in the morning now.
Mm.
You understand? So maybe Asian high, price to Asian high react to this zone. And then let's say you were taking this this would have been a very guy. Oh boy, see this sweet sell guy,
Yes.
sweet sell like this. And then where would you be targeting? You'll be targeting this zone here.
Yeah.
You understand? Because this is our weekly and daily and monthly levels, right? So your target will be around this place for a potential buy to the outside. So like this now, we dey find now looking for more sales. I mean more sales. The first 4 hour candle of every day is your Asia 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 time,
Mm.
Asian time, you understand? The first 4 hour key level. So on a new day, let's say Monday. Monday na after Monday create okay this is Friday, Sunday, let me put it here. This is Friday, Sunday, Monday. Let's say Monday, you understand? Monday, the first 4 hour key level around this place here will be your Asia. So now the closest 4 hour key level or daily key level around this zone here, that is where you can get your entry from, which is this OCL. Where is the closest? This is this OCL. For the sell continuation,
Mm.
you understand? For the sell continuation, this is this one and this one here too. Price can still pull back to that place depending on the volatility on Monday.
Mm.
If you know price Monday doesn't usually have
Much
volatility or
volatility.
much volume like that. So now you can align this level with a four. Okay, you can see how this 4 hour has reacted to it, right? So it's not fresh. The closest 4 hour will be this one here, this one here. So if the 4 hour key level, but price can still use it oh, price can
Yeah.
still use this
Me, I'm
level
even
again.
looking at that one above
um
it.
price can still use it, possibly price can still use it. So the after the first 4 hour key level, let's say during Asia, during after Asian session, you understand, Asian high and Asian low have been created, then you can now look for entries after those levels have been created, and you can see how this, you can see how sweet this zone is, see how this zone is after the Asia. Then during maybe London open or New York open, you can look for a potential sell confirmation from here, from here your stop loss
Above it.
above this high here, and then you be targeting those moves, right? So if you want to use trend line you can use a continuation trend line on the 4 hour time frame, or on the
That's for those that use
for those that use
trend line.
trend line.
Now me and trend line,
Trend
like
line is
one and
sweet though.
hundred. No, me and it with trend
Trend
line.
line is sweet
No.
though. So if you use trend line, you can, let's say from this level to this level, no, no, this trend line is not okay. Let's see this one. So, okay, you can see how this level is at. No, this trend line
I think
is not that good.
from this one and this one.
No, no, no. This one that is, I know you draw a trend line like that too. But like, but you get my point, yeah. So like this trend line now, this is the point. Which was in a oh, if the rain, I'm crying.
Why? Okay, so
So okay, but where the best time frame for you to use trend line is 4 hours and 1 hour for intraday traders or for day traders. You understand, ba? And then if you're a position trader, a swing trader, you can use the daily, the weekly, and the monthly. Come, let me check for 1 hour. Let's see if we can get a very good trend line for 1 hour for continuation. Let me see. Let's see. No, it's not
all
good.
your trend line, you're there against that place.
I can tell you. So let me see here again. So let's say no, it's too low. No, 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 no. Ah, let's see this. This should be good. This should be good. Yes, it should be good. It doesn't have to be perfect, but it should be good. Around this level here, around this level here, conciliation.
Okay, so
This place too long. You cut am off. I don't know. I don't know. So let's say the trend line is not supporting our 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 analysis, but let's just put that in mind that we are going to continue selling from on Monday.
from here,
From here, price might sell from here or around here.
that's the
Uh,
place where I'm looking
and
at.
then
This place. If you go to 4 hour, let me
mm,
show you. If you go to 4 hour, you see this place. Okay, like chat don't see put out. uh So me, I dey look this place or this A shape sef, this place. That's to me. Oh.
okay, for confirmation.
Yes. If you go one arm, like this, maybe I feel refine am come here. Or this
Or
place sef dey
or you
very
know
okay.
say you get something wey dey do for 15 minutes like break of structure, inducement, and then
Yes.
so go 15 minutes. Let's see if there is a possibility for that to happen. But for us to conclude on this is what Monday price action will do.
We do. So
So
in my own opinion, maybe something like this will happen or something like this.
it happen. That is for the job, right?
Yes, will happen.
But you know that this
Even
this
up
first place,
here
bar, this first place, it is still like similar thing to what we did on
on
DXY.
DXY,
You
yes.
understand, man? It's still like a similar thing, just like the opposite of what we did on DXY. You understand?
So I
So
think this will be the
so
end.
this is like good for us to watch out for. Trade at your own risk, oh. Don't come and visit me in Madrid, oh.
Every
Ah,
analysis is like a prediction. Now let's just say you are just analyzing, or it's not 100%. So guys, take care of yourself and have a very beautiful week. So bye.